Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of GeoData Vision.
Welcome to our podcast series addressing everything you wanted to know about regulatory compliance, but were afraid to ask. I'm Dean Stockford from M&M Consulting, joined today by Len Suzio, President CEO of GeoData Vision. So, Len, what's the topic for today's podcast?
Well, Dean, in banking circles, everyone's been talking with great excitement about potential big changes to the regulations, particularly Section 1071, Community Reinvestment Act, and fair lending during 2025. So I thought we would start with how changes are made to the regulations and then focus on some of the most dramatic changes that should be made during 2025.
Yeah, well, that sounds like a timely topic as we're in the first few days of 2025 and a few weeks away from the beginning of the second Trump administration. And of course, given your background, I think this is a great topic, and I'm sure our audience will be excited, very interested to say the least. But please share with us your thoughts on this very important, or I should say, these very important topics.
Yes. Well, I thought it would be good to begin with a kind of an overview of how regulatory changes are made. And Dean, there's basically 5 ways in which regulatory changes are put into effect. So let's go over those. Number 1, the obvious one, Congress does pass or amends a law, and then the regulators must develop regulations to enforce the law. Good example is Section 1071 of Dodd-Frank. While the law was passed back in 2010, it wasn't until 2023 that the regulators finally passed regulations to enforce Section 1071. Another good example is that back in 1994, Congress passed the Regal-Neal Interstate Banking and Branching Efficiency Act of 1994, which, among other things, amended the Community Reinvestment Act to prescribe certain requirements for the contents of the written CRA evaluation. So that is the very first way regulatory changes are implemented. The second way is that regulators implement or amend the regulations themselves without being prodded by the legislature, Congress. So during 1995, the regulators substantially changed the Community Reinvestment Act based on the 1994 congressional legislation, which I just mentioned, to focus on the bank's performance rather than the process. Then in 2005, the agencies amended the CRA regulations once again to mandate a new size category, the intermediate small bank, that would be the subject to modified tests during a CRA exam. In 2020, the OCC itself published a new set of CRA regulations that were rescinded the following year under the Biden administration. When regulators change a regulation, there's a prescribed process they must follow, including the publication of the proposed changes and a public comment period. Generally speaking, formal changes to the regulations can take 6 months to a year. So that's the second way in which regulations can be changed. The third way our regulations are changed is determined by the way they are enforced. Back in 2009, under the Obama administration, a new concept in the enforcement of anti-redlining practices was put into practice without any formal changes to the regulations and without any formal announcement. What I'm talking about is the concept of a REMA, or reasonably expected market area. As I have said in many webinars and published articles, how a bank's market is defined by far the most important decision, because the delineation of the REMA, or the CRA assessment area for that matter, determines not only a bank's statistical performance, it determines the benchmarks against which a bank's performance is measured. Another prominent example of change in regulatory enforcement can be found in the Department of Justice's, quote, combating redlining initiative, end quote, announced by the DOJ in October 2021. Following 2 years, in 2022 and 2023, now that we're coming to the end, we're at the end of 2024, saw a record number of referrals from bank regulators to the DOJ, all predicated on the change in the way the regulations were enforced, not a change to the regulations themselves. So that's the first 3 ways regulations change. Now, a fourth way is that it may be affected through litigation. In fact, as we're speaking today, the Section 1071 regulations and the 2023 CRA Rule are being contested in court by the banking industry. If the plaintiffs prevail, then the regulations may need to be rewritten or amended. And finally, there is the CRA itself. No, I'm not speaking of the Community Reinvestment Act. I'm referring to the Congressional Review Act, which allows Congress to reject new or amended regulations if Congress acts within a prescribed period of time after the publication date of the new or revised regulations in the Federal Register. This actually happened in late 2023 when Congress, surprisingly, in a bipartisan vote, passed a joint resolution of, quote, disapproval of Section 1071. That resolution would have prevented the CFPB from implementing Section 1071 regulations as passed. However, President Biden vetoed the joint resolution, and the Senate failed to override the president's veto. By the way, an override of the president's veto requires a vote of 2/3 to overcome. So those are the 5 ways in which regulations can be changed or amended and affect banks.
Okay, Len, that's a great overview of how regulations may be changed. I think the shock and awe of the whole thing is that Congress actually did something. That kind of surprises the hell out of me. But can you share with our audience how these 5 potential paths will play out, during 2025?
Okay, let's go back. The first way the regulations change, of course, are by legislative action. And I don't see this being a factor during 2025. The process takes too long, and the Republicans don't have a big enough majority in the House or Senate to overcome likely Democratic objections. So while that's always a possibility, legislative change I'm talking about, I don't see it happening during 2025. The second method of changing the regulations is that regulators themselves propose and rescind either or both the 2023 CRA Rule or the Section 1071 regulations. This I see as very probable. Certainly, the Biden administration set a precedent of sorts in 2021 when the OCC proposed and then rescinded the 2020 CRA Rule only a few months after it had taken effect and approval by the OCC. Given the announced intention of President Trump to emphasize deregulation, I would expect this is a highly probable path for both rules. It can be done before the end of 2025. If the agencies do pursue this course, it's likely they will propose new, less burdensome versions of the CRA and Section 1071 rules. This is all complicated by the fact that the data collection under Section 1071 is scheduled to commence on July 18th of this year of 2025 for Tier 1 banks. Those are banks that originated 2,500 or more small business loans in each of the previous 2 years, and pertains to small business loans as defined in Section 1071, not the classic CRA definition of small business loans. So I do see this as a high probability of being a factor during 2025, and it could be a significant effect on the way regulations are implemented and enforced. Now, the third way, of course, is changes to regulatory enforcement by regulators themselves. This is another possible course of action for the regulators sympathetic to the relaxation of regulatory enforcement. It does not require formal publication. It requires that the consumers feel restricted to relax interpretation of the regulatory requirements. And again, we've seen examples of changes in the way regulations are enforced by the way exams are conducted in the field. So I think this is got a strong possibility as well. The problem with this, of course, is there's no necessary public announcement of this. It's just going to be affected quietly, and so it will take a while to manifest itself. But it definitely is a possibility for affecting regulations during 2025. And then, of course, the fourth way is for potential regulatory changes is litigation. And of course, and that course of action already is in process for both the 2023 CRA Rule and the Section 1071 Rule. Final court action is possible during 2025. And if the litigation goes all the way to the Supreme Court, it may prevail, especially in light of the Loper-Bright decision that substantially overturned the Chevron doctrine that emphasized deference to the agency interpretations. So unless Congress repeals Section 1071, regulations regarding its enforcement must be passed sooner or later. So no matter what happens, whether it's overturned by the Supreme Court or whether the regulators themselves want to change it, it's going to take time and more action by the regulators. And it will be very evident. And of course, the fifth possibility, the Congressional Review Act, the CRA won't apply to either the 2023 CRA rule or the Section 1071 regulations because it must be passed and sustained within a strict period of time following the publication of a new or amended rule in the Federal Register, and that deadline has long since passed. So those are the 5 ways I think potential avenues for regulatory change to come into effect.
Yeah, that's great. So I've shared, and you've shared, of course, with our audience, the potential paths to change with, great deal of emphasis on the CRA and Section 1071. I got my tongue tied this morning, Len. I get all excited about, thinking that these could go away. But what are the areas of concern with respect to both of those rules? And while I say that, of course, that impacts us. I mean, we're geared up and we've been studying this, so we're ready to roll up our sleeves and assist in any way possible with our clients. But, out of fairness to the client, I also think that some of the provisions within these acts are slightly onerous and a little off or inconsistent with the legislative spirit. So I digress. I'll leave it at that, Len, and turn it back over to you.
All right. Well, in previous webinars and podcasts, you and I have talked about some of the inherent problems with both Section 1071 as well as the 2023 CRA rule. Mm-hmm. But I think it'd be good to kind of recap some of the big issues embedded in both rules. First, the elimination of the flexibility regarding the configuration of assessment areas for, quote, large, end quote, banks means many assessment areas will not be realistic, and unrealistic assessment areas being unrealistic, unreliable, and potentially meaningless and even misleading performance ratings. The new 2023 CRA rule also is incredibly complicated and will require many calculations and data conversions to arrive at final performance ratings. For many banks, as many as several hundred calculations, data conversions may be necessary. And that's just highlighted what I think of the big issues embedded within the new 2023 CRA rule. Section 1071 appears to have gone far beyond the intent of Congress. In fact, the passage of the joint resolution of disapproval proves that point. There are several key legal arguments raised in the Section 1071 litigation. In my opinion, the most powerful argument is that the CFPB went too far, expanding the mandated fields of data way beyond the specifics cited in the law. Given that congressional opposition to the Section 1071 rule was bipartisan, it's possible that Congress may act to amend Section 1071 of Dodd-Frank to explicitly limit government-mandated information to be collected. If that should happen, the CFPB would need to repromulgate the Section 1071.
Wow. This has been very informative, Len, and it certainly enlightened me for sure. Do you have any final words for our audience today?
Well, Dean, of course, the banking community is hoping for changes to the 2023 CRA rule and Section 1071 regulations, and they are likely to get it. The problem is the volatility in the regulatory climate, even with the anticipated relaxation of the new rules, not in anyone's interest and makes regulatory compliance greatly uncertain. And don't forget that regulatory exams are always retrospective. So relaxation of how the regulations are applied for the next 4 years may not provide reliable relief because the presidential administration that will succeed the Trump administration very, very well resume the Biden administration's approach. And that approach will be looking back at the years 2025 to 2028. So no matter what happens in 2025, bankers can't let their guard down. One thing is certain, proactive regulatory compliance policies and practices are always going to be important, no matter who is the president of the United States. Inadequate regulatory compliance systems have been a consistent criticism of all regulatory compliance cases referred to the DOJ. So every banker listening to this podcast ought to make a review of their institution's policies and practices a high priority for 2025. I emphasize practices because sometimes institutions have the so-called the formal written policies, but they're really not being implemented. So a review of the policies is not adequate in itself. A review of how they're being put into effect through the practices of the institution is imperative.
Yeah, and to play off my previous podcast, again, compliance officers, illegal teams, et cetera, et cetera, et cetera. Don't be complacent and make sure you pay close attention to this. But this has been sound advice, Len, and I really appreciate it. This is Dean Stockford from M&M Consulting.
And this is Len Suzio with Geodata Vision saying, we hope that you found today's podcast informative and helpful. And we encourage you to let us know of any topics you would like us to address in future podcasts.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and Geodata Vision on LinkedIn for all the latest news and information on compliance hot topics.